Hello everyone, my name is Ayush Khanna and you are watching our channel Ayush Khanna Classes. So, in this video, I'm going to start with RTP which have been released, RTP of accounts and advanced accounts. Firstly, I will be completing with uh, RTP of accounts. Okay, RTP of accounts first I will be completing with for both old course and new course. I'm going to start with the new course RTP for November 2019. Okay, so let's start. Firstly, let's see where the RTP is. The site, institute site, BOS Knowledge Portal, intermediate course. When you select the intermediate course, you see here revision test papers. Below paper number 8, FM Eco. Okay, so you can click here. November 19 Group 1 account. Okay, so here is the RTP of 182 pages of this is the combined RTP. Okay, of all the four subjects, combined RTP is available. Let's start. Every day I'll be starting with I'll be completing 4 to 5 questions. Okay, and it depend upon the size of the question. Okay, now let's start. Question number 3, page number 7. I'm starting with question number 3, page number 7. Yeah. Here's of profit or loss payout to incorporation. Okay, the question says Roshni and Reshma working in partnership registered a joint stock company under the name of Happy Limited on May 31st, 2018 to to take over the existing business. Okay, the summarized profit and loss account is as given by Happy Limited for the year ended 31st March 2019 is as under. Okay, firstly, see, salary will be distributed in a time ratio. Interest on debentures. Debentures is issued by the company, so it will be allocated to post incorporation. Then next, sales commission. It is in the sales issue as it is related to sales. Okay. Then bad debts. But there's an adjustment for bad debts, so we'll see it. Okay. Depreciation. Depreciation 19250, out of which 1250 is for post incorporation. Okay, 1250 for post incorporation. That means 19250 minus 1250, that is 18,000 will be distributed in time ratio, and 1250 will go to post incorporation. Okay, next, depreciation done. Rent 38,400. Time ratio, company audit fees. It is now of company. Okay, company audit ratio, it will be allocated in post incorporation. Okay, then there is net profit. What does adjustment says? Adjustment says that GP ratio was constant throughout the year. Okay, depreciation includes 1250 for assets acquired in post incorporation period. Bad debts is recovered amounting 14,000 for the sale made in 1516. has been deducted from bad debts mentioned above. Total sales were 18 lakh, of which 6 lakhs were for April to September. Now, what are the incorporation and dates? What are the incorporation months? See, the pre-incorporation is from April to May. Okay, out of 12 months, April to May is incorporation, first 2 months. Then the remaining 10 months is our post incorporation. Okay, now let's start with the question. Gross profit we are given with 4,50,000. We have to distribute it in sales ratio. Yeah, let's start. I'm starting with question number 3. Statement of profit and loss. Particulars. Pre-incorporation and post-incorporation. See, we are gonna calculate firstly what? Sales ratio. Working notes. Calculation of sales ratio. Yeah. Now we are given with sales from April to September. That is 6 lakhs. It is for 6 months. April to September is 6 months. So month average sales for these 6 months 1 lakh. Okay. Then from April to May total is 2 lakhs, and June to September is 4 lakhs. Then remaining sales. Balance sales is 12 lakhs. As total sale is 18 lakh, and for the first 6 months, 6 lakhs is the total sales. Okay, average sales here. Average sales for 6 months, that is 2 lakh. Now, pre-incorporation sales. Incorporation sales is to post-incorporation sales. Okay, pre-incorporation sales is 2 lakhs, and post-incorporation is uh, 2 lakhs for 6 months. This is 12 lakh, and 4 lakhs for 4 months. That is 16 lakhs. The sales ratio is 1 is to 8. Okay, sales ratio is 1 is to 8. So firstly GP make a column of ratio here. Sales ratio, how much? 1 is to 8. GP is of, I think, 4,50,000. Have a look. Yeah, 4,50,000 is the GP. 1 is to 8. That is 50,000 here and 4 lakh rupees here. Next, now we'll subtract all the expenses. Firstly, bad debts. Before expenses, bad debts recovered. 14,000 is the bad debts recovered. Okay, then less salaries. Salaries. Sorry. How much is the salaries? Salary. Salaries. 1,44,000 in time ratio. 1,44,000 in time ratio. Now, what is the time ratio? 2 is to 12. That is 1 is to 6. 1 is to 6. Okay. So the amount of salaries shall be 1,44,000 divided by 7. Amount of salaries is 24,000 and 1,20,000. Next, audit fees. It is the company audit fees. Okay. Post incorporation. The amount shall be 12,000 rupees, if I'm not wrong. 12,000. Depreciation. See, total depreciation is 19,250, out of which 1,250 is for post incorporation. Okay, so I was mistaken. The time ratio is 1 is to 5. Okay, I mistake in mistake I said 1 is to 6, but actually it is 1 is to 5. Okay, then balance 18,000 will be distributed in time ratio. Time ratio means 1 is to 5. That is for pre-incorporation 3,000 and post-incorporation is 15,000 plus 1,250 is for post-incorporation. Okay, working note, you have to show it in show properly in working note. Okay, 3,000 and 16,250. Sales commission related to sales. Okay, so sales ratio, that is 2,000 and 16,000. Okay, bad debts here. Bad debts, 49,000 is given in profit and loss account and 14,000 have been recovered. So total amount of bad debts will be 63,000. Okay, 63,000, and it will be distributed in sales ratio, that is 1 is to 8, I suppose. 1 is to 8. Okay, 7,000 and 56,000 total. Then interest on debentures, post incorporation It will be 36,000. And rent and time ratio. That is 4,000 and 34,400. Now you will get an amount here. Pre-incorporation. Pre-incorporation profits will go to capital reserve, and the post-incorporation profits will go to is our net profits. Okay, let's calculate. 50,000 plus 14,000, 64,000 minus 24,000, 40 minus 3, 37 minus 2, 35, 28 and 24,000. Here 24,000 here, and here 4 lakh plus sorry 1 lakh 4 lakh minus 1 lakh 20,000, 2 lakh 80,000, 2 lakh 80,000 minus 12,000. So we will calculate here 4 lakh minus 1 lakh 20,000 minus 12,000 minus 16,250 minus 16,000 minus 56,000 minus 36,000 minus 34,400. 1,09,350. It is our net profits. Okay, so our question number 3 is finished. Now let's start with question number 4. 4 and 5 I'm going to solve here only, because it is from study mat, same to same question. Actually they don't have many questions for bonus shares. Okay, question number 4. We have to show necessary journal entries. Okay, firstly, uh, we have to receive final call on money. uh, Final call money. Okay, so the entry would be first entry, equity share capital to, sorry, or equity share equity share final call account debited to equity share capital 5,40,000. Then bank to equity share final call. Then we have to issue bonus shares. Okay, uh, one for every bonus shares. See here, one for every four bonus shares held. So the number of bonus shares would be, sorry, number of bonus shares will be equal to 4 lakh, no, sorry, 2 lakh 70,000 divided by 4, divided by 4 into 1. Okay, it will be 2 lakh 70,000 minus 67,500 into 10 is the amount of bonus shares, that is 6,75,000. Okay, 6,75,000 is the amount of bonus shares. So what would be the entry for the capitalization of bonus shares? It would be a securities premium account for first priority 75,000. Then capital redemption ratio, how much? 1,20,000. General reserve, full amount 3,60,000. How much amount is done? See, 6 into 10 minus 75,000 minus 1,20,000 minus 3,60,000. 1,20,000 amount is left over. Okay, so balance would be collected from profit and loss account. Balance would be collected from profit and loss account. Okay, and the last entry would be bonus shares to equity share capital. Okay, I hope you got it. Question number 5. Omega company offers new shares of 100 each at a premium of 20% to the existing shareholders on the basis of 1 for every 4 shares. The cum right market price of a share is rupees 190. Calculate the value of right share. So, value of right share. Firstly, we have to calculate x right value of shares. That is, uh, I'll write it down. 1,90,000. Sorry, 190 rupees into 4 plus 120 into 1. Okay, for every 4 shares. Okay, premium amount and the it is the value of share divided by 4 plus 1. Amount shall be 760 plus 120, 880, 880 divided by 5. It will be 176 piece per share. Okay, 176. Then the value of right share is 190 minus 176. That is 14 rupees. Okay, our there are total of 20 questions, and questions done are 3, 4, and 5. Then we move on to question number 10. Higher purchase transactions. Higher purchase transactions. In this, we have to calculate the cash price of the cars and interest paid with each installment. I think the time is more than enough. So we'll continue in the next lecture. In the next lecture, I will be making you solve here question number 10 in the next video. Okay, then and accounting standards. Okay, 3, 4 accounting standards I'm going to make you solve. Okay, the next lecture. Thank you, everybody. Take care, and do like, share, subscribe my channel. Thank you.